Refinitiv's U.S. presidential election app allows you to keep up to date with the latest news in relation to the election. The Markets Overview tab gives insight to how the 2020 election may impact the market. It includes charts for key indices, government bonds, and commodities. The 2020 presidential election app provides a one-stop shop for all things related to the election. By combining news, graphs, charts, and market information, this app aims to provide you with a holistic view of the most important information leading up to the November 3rd election.
Hello, everyone, and welcome to our special election coverage for Refinitiv Perspectives Live. I'm Keesa Schreane. Heading into the presidential election on November 3rd, the U.S. economic outlook is one of growing financial and social imbalance, an imbalance with the potential to delay, disrupt, or destroy the recovery from recession brought on by the COVID-19 pandemic. Now, regardless of the election's outcome, the nation faces massive treasury debt and a swollen central bank balance sheet. Consequently, fiscal and monetary policymakers may have too few tools at their disposal to put the economy back on a path to prosperity. The choices these authorities make now will have implications for many years. With us today to talk more about this is Mike Dionne, Managing Director of Sales at Refinitiv Americas, and economist Jeff Hall of IFR. So Mike, starting off with you, what are some of the peak areas of interest you're seeing from your clients, especially during this election season?
Yeah, Keesa, so the way that we primarily are tracking this is obviously in how Icon is being used. And not surprisingly, the top three stories over the last week or so have been around the election, specifically Trump related. The top headline last week was around backlash that Trump faced relative to removing his mask upon the return to the White House. Interestingly, despite the election dominating the most read list, 11 of the top 16 being election related, Biden opening up a 10-point lead was only the 10th most popular article. And I'm left to wonder if in part that isn't a little bit of what we saw last election cycle, where there seemed to be a pretty big disconnect between what the polls were telling us and what the ultimate results turned to be. But it's a little bit of a hypothesis on my part. That's backed up by our data, which shows retrievals of news stories on Icon and Workspace that feature the word Trump outpaced mentions of Biden. Whatever you may think of the president, he's undeniably box office. So the chart here that we're showing shows very specifically what's resonating and what is getting people's attention.
Mm-hmm. So switching gears just a bit, wondering what we're seeing in the area of consumer spending. So which sectors are faring well right now and which sectors are struggling?
Yeah, as this chart shows, the largest share of GDP is coming from consumption expenditures, representing roughly 70% of the GDP across a range of categories. Consumption have returned or surpassed pre-pandemic levels. I think most people are familiar with the really strong stories coming out of the big tech companies, Amazon, Facebook, Google, and so forth. And that would be reflected in part in those numbers. Auto sales, particularly used automobiles sales, are very healthy. So that is reflected here. Stock prices of Home Depot and Lowe's are soaring as America's spending more time at home, looking for ways to perhaps improve that experience at home. So that's reflected in stocks there. Consumptions of services, on the other hand, are not faring well. The chart up on the screen now shows the impact on the travel industry. They're just decimated. I've done a fair amount of travel myself, and you just can see it walking through an airport as an example that travel is way down. At Refinitiv, we've been virtual since March, and we expect to remain so for the better part of 2021, as are many companies. So you can imagine the impact on travel that, as folks already maintain that virtual environment, aren't doing nearly as much. We do see a bit of a bounce back for restaurants, particularly those who adopted mobile payment systems, embraced delivery mechanisms. So that probably has been an experience as we cocoon in our homes, doesn't come across as a huge surprise. So in essence, it does suggest that there are elements of the economy that are doing very well.
It's great to hear some good news there around that. And Jeff, bringing you in here, what is the data showing around the impact that future taxation may have on consumer spending?
Yeah, let me just back up for a second. This morning, we saw very robust September retail sales. They exceeded expectations by a wide margin, particularly in the group that we call control sales. That removes auto dealers, building supply and garden supply centers, as well as gasoline station sales. So we call that core retail sales. That was very strong. So that looks like it's going to propel consumer spending well into the fourth quarter. We do worry that some of that consumption spending was pulled forward into the quarter, perhaps over anxieties relating to the election, perhaps over anxieties relating to taxation. We think that given the double-digit lead that candidate Biden has in the polls right now, the consensus is, at least among market participants, that there is a blue wave underway and that we should be girding for more taxation in the months that follow the election. So we think anytime you see a price rise or a tax, that becomes a headwind to consumption. So we'd be on a guarded outlook for personal consumption expenditures beyond the fourth quarter.
Great news. So moving forward with that, I just want to make sure that we're understanding you correctly. Are you saying that right now, with that information, we can assume that the CARES Act is working?
I think by and large, the blanket program is working. It's not reaching every person who needs it. There is, as the fiscal authorities contemplate another spending package, they're looking at making more targeted relief instead of just throwing as much money at the problem as they can. So yes, the CARES Act is working, but it is insufficient to protect the economy from backsliding later this year.
Okay. And let's talk a bit about household savings. I know we're talking about taxation and people are maybe saving up for what's expected for the future. Mike, what are your thoughts on that?
Yeah, I think we've seen Americans are saving more and spending less is the short of it. The personal savings rate spiked at a record 33.6% in April, but has since fallen by more than half, down to roughly 14%. Increased personal savings creates a net drag on the economy, however, especially during a recession. Persistence of this paradox on the consumer side alone will make it difficult for monetary and fiscal policy to invigorate the economy. But the paradox also exists on the business fixed investment side as well. So, certainly something we need to continue to keep an eye on. I think in part you saw that savings rate spike just out of concern about the future. And I think as the uncertainty begins to, I should say, as greater clarity comes about, the election being one of those items, I think we probably will continue to see people saving less and spending more is the short of it.
Okay, so we talked about taxation, we talked about spending less, saving more, those sectors that are doing well. Let's top off with talking about growth indicators, always a happy subject to end with. So Jeff, could you talk to us about growth indicators that you're seeing now?
Yeah, as I said, the September retail sales report was one of the best that we've seen since coming out of the depths of the crisis back in April and May. So that's good news. And as Mike said, that consumption expenditures represent about 70% of GDP. So that is our biggest growth indicator, and that's looking positive, if somewhat tentative. Looking at the business fixed investment side, we're seeing a retrenchment in spending on commercial projects, hotels, in some cases factory spending, although lately that's been looking more upbeat as well. So we look at data on ICON relating to commercial and industrial loans, and that's looking a little squishy right now. So we're guarded on the outlook for the business fixed investment side. On the flip side, you have residential investment spending, and we've seen blockbuster growth in new construction demand, housing sales, building permits, construction employment. So the growth indicator there is looking quite strong. Turning to the government expenditure side, state and local government budgets are strained right now. They're receiving less in receipts. and they're increasing their outlays related to the pandemic. So we're not looking for strong government investment expenditures in the fourth quarter or in the first quarter of 2021. At the federal level, obviously with the pandemic unemployment and compensation and emergency unemployment compensation, we've taken on an additional $4 trillion in debt in just since April. So with another fiscal relief package coming, we may tack on another $2 trillion to that national debt. So that leaves very little wiggle room for investment in other areas like infrastructure, roads, bridges, airports, and so forth. So that outlook remains guarded as well. And then on the net export side, we are seeing growth in the volume of both imports and exports as trade recovers. However, there's a lot of room to grow there, and there's a lot of room to improve our terms of trade with our foreign partners. That does not look likely as economies start to have rolling shutdowns again. So again, those imbalances may continue to grow going forward.
So great information, some good hard numbers around some healthy sectors. You mentioned Home Depot and Lowe's, for example, showing that Americans are spending more time at home. So we see home improvement areas going up, consumption services not faring well, travel industry. Restaurants, however, some are bouncing back, and that's thanks to delivery and mobile systems. So some really good news there, as well as strong core retail sales in September, something to put a smile on our faces there. Possible taxation following the months following the election, depending on, as you mentioned, the blue wave, which could be a headwind. Positive commentary around the CARES Act. People are saving more, spending less, no huge surprise there, which could also be a drag on the economy. That paired with state and local government really seeing a strain in their budgets there, as well as the debt that the federal government is seeing, $4 trillion since April. And this could likely impact infrastructure projects and things of that nature and delaying those. So really good information. All of it points to the fact that we need to really stay on top of it and continue this discussion to see where the data leads us in the future. Mike, Jeff, thank you so much.
Thank you.
And thank you, a special thanks to our audience for joining us today. As always, let's keep the conversation going. Visit us on LinkedIn, Twitter, or YouTube. I'm Keesa Schreane. Thank you, and we'll see you again next week. Be well.